Let's turn our attention away from the equity markets and focus on the commodity space. Manisha Gupta joins us to help us out with what's going on there. Manisha, take it away.
Thank you for that, Nigel. Well, I'm looking at the gold prices because there's no stopping this one. We're trading at yet another all-time highs in the Asian markets right now. So 2709 is an all-time high. In the early Asian markets, we saw 2700 take away. And since then, it has been a $16 to $17 of a jump up that you can see in case of gold prices. Well, 2685 for some time has been a very stiff resistance, but that got taken off very easily in the overnight markets there. So above 2700 there. With this, we are up by nearly 2.5% for this week. We are up 5% on the month, and for this year we are up by 30%. The gold clearly is outperforming various other asset classes and many other commodities as well, and with 30% of gains, gold is giving you the best yearly gain in 14 years now. That's the kind of strength we've seen on this one coming in. Silver as well, not too far behind, because we're looking at stronger gains onto that one as well. The support for the gold prices comes in from the fact that the European Central Bank for the third time yesterday cut rates by 25 basis points. There are more banks coming in, and you are also anticipating US Fed to cut interest rates by 25 basis points in the month of November. Going forward, it also is going to be about the uncertainty over the US presidential elections. When you pick all of those years, as and when there is US presidential elections, we have seen gold prices gain. And this time around, the uncertainty is just way too much. And then it also is about the geopolitical tensions. The war in West Asia has been adding premium to prices. The global central banks have been buying gold. And it's not just India which is buying gold right now in the physical sense, but the global funds on funds, ETFs, all of that also seem to be accumulating a lot of gold. The Western world actually is buying gold for the first time in a decade, the kind of way they're buying it. And then when you look forward, the forecast for the gold prices is much higher. Bank of America, Citi, and the LBMA meeting that just got concluded, all of them believe that $2,950 to $3,000 an ounce in the first quarter of 2025, if not earlier, is where you could be looking at the gold prices headed for. Silver also has continued to gain. Silver actually has outperformed gold with 34% of gains in this year until now. And the overall industrial metal as a pack also seems to be doing well today. On a week-on-week basis, we're still in the negative, but on a month-on-month basis, quarter basis, and YTD basis, we are positive for many of these base metal prices. And cementing those gains right now is the Chinese data. The third quarter GDP numbers coming in better than what the street was anticipating. And not just that number, when you look at the industrial output, retail sales, employment data from China, all of that has come in on the better side. So perhaps the China stimulus seems to be showing into numbers, and that has added some support to base metal prices. 0.5% to 2% of gains across industrial metals as well.
Thank you very much for that. Risk off equities, risk on gold. Brokerages see more than a 10% upside in gold prices from current levels. We'll